Hello, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, not a good afternoon, right? Just before starting the show, we saw a fall coming in the market and a sharp fall for the Nifty.
Absolutely, very sharp fall coming in for the benchmark indices. Excess of 200 points from the day's high gone when you talk about the Nifty 50 index. Let's take a look at what Nifty Bank is doing. If that one also has fallen in tandem with the benchmark indices. And if you look at Nifty Bank, yes, that one also has erased over 650 points from the day's highest point. So that is Nifty Bank also seen an erosion of approximately 1% or so. Let's take a look at broader markets, Vinny, because they were the brightest spot and they are holding on to the positive territory with the mid-cap indexing 0.5% downtick from the day's highest point, but nevertheless holding on to the positive territory. And the small cap index also, let's take a look at what the picture is there. That one also is holding on to gains. But the point being that the fall in the market has been very sharp, very steep, and this over a course of around 5 minutes or so. Like you mentioned, just before we could kickstart the show, we saw approximately 200 points shaved off from the benchmark indices from the day's highest point. That is Nifty index.
Absolutely, that's Nifty index. And also, let's not forget that in Nifty Bank, like you were mentioning, we did have the top losers for the Nifty 50 also coming from the bank. So ICICI Bank, we had Axis Bank that is seeing a sharper fall. Reliance also has seen a bit of a fall, and in terms of the losers coming in is Reliance as well. So bank clearly, causing some bit of a pressure. Look at this ICICI Bank chart also. Similarly, we have seen that fall coming in, but that's how it's looking like. But let's bring on board our technical analysts as well as researchers for today. From the technicals, we do have Ashish Kyal joining in with us, while from the research team, we have Ankita as well as Snehi joining in with us. A very good afternoon to all three of y'all, and thank you so much for joining in with us this afternoon on ET Now. Let me start then with the first stock that we should be focusing on today, Jubilant Pharmova. That was a stock which was managing to hold on to very good gains the last time I checked. And why is that so? It actually managed to touch a 52-week high in also in an intraday move. As of now, managing to hold on to 3.5% of gains after the company has received a voluntary action indicated status from the US FDA. This is for Jubilant Pharmova's subsidiary which they've received, and they announced that the Jubilant Generics Limited has received this communication from the US FDA. Generic business has been growing very fast, and this is in their Roorkee plant of Jubilant Generics Limited, and that is what is keeping the stock a buzz today, managing to hold on to 3.5% gains. Let's not forget, generic business is something that has been picking up traction, and that is what is supporting today Jubilant Pharmova's up move in trading.
Absolutely, this one is a bright spot despite the markets giving up their gains. 3.5% uptick for Jubilant Pharmova. Ashish, let's come to you. Good afternoon. And Chennai Petro, how's the charts for this one looking like? Because yes, let's not forget, Chennai Petro also moves in tandem with the news flow coming in when it comes to the windfall tax revisions or so. But on the charts particularly, how is Chennai Petro looking to you?
Look at the overall movement of Chennai Petro, the index is looking, the stock is looking positive. It formed a very important low around the levels of 870, from where we saw a very smart recovery on the upside. Today there is some selling pressure from the higher levels, but I think if the stock manages to cross 960 levels, we can again head towards the level of around 1030 or 1040 on the upside. So the overall tone for Chennai Petro is positive as long as 870 remains intact on the downside.
Okay, that's the word coming in on Chennai Petro. Let's move on then to the next stock that we should be focusing on. And what we'll talk about is Nestle. Nestle is the next stock we're keeping an eye out on. The shares of Nestle are sharply down and out in trade today. Almost a fall that we saw for Nestle coming was almost a 3-4% fall in Nestle stock price. This is because why? Now, reports suggested that the sugar usage in infant milk is something that has been much higher, and that is what is happening, the main cause of Nestle seeing a downfall. Now, furthermore, such products, they said, are sugar-free in home countries like Switzerland, and the Public Eye and International Baby Food Action Network said that in a report on April 17th. Also, obviously, furthermore, the Indian government may look into the issue, and what Nestle highlighted that over the past 5 years, Nestle India has actually reduced their added sugar by around 30% depending on the variant in their infant cereal portfolio and milk cereal-based complementary food also, which they're focusing on. Overall, the milk and nutrition side of the business for Nestle accounts to around 40% of their business, milk as well as nutrition and baby food, everything that is included there. So yes, let's keep an eye out on that. As of now, the spokesperson of Nestle have not commented anything. These are just reports in terms of investigation by local authorities. So that's what we're keeping an eye out on. Let's move on then to stock number 4 for today. Snehi, Mastag, this stock actually saw a sharp surge in trade today. What is the reason for this? Look at the spike up, right, we're seeing in the chart. What is the reason behind this?
Well, absolutely, Winnie. If you see the charts today, somewhere around 12 o'clock, there was a sharp spike coming in Mastec's share price, and this is the stock went up as much as 17%, but fizzled out those gains, but nonetheless still managing to hold up 10% in a market that has seen such a sudden fall. Now, this comes after being named as a supplier on the UK Ministry of Defence's £1.2 billion digital and IT professional services framework, it said in an exchange filing. The budget is over a period of the next 4 years, and Mastec has been placed on Lot 1, and it will include services like enterprise and tech architecture, data, innovation, tech assurance, and knowledge and information management. The company will also be a subcontractor for Kinetic Limited on Lot 2 and also on Lot 3, which will involve services like cybersecurity, crypto, and integrated systems. Now, remember, Mastec has been a supplier to the UK Defence Ministry since 2017 and continues to invest in developing their mission-critical capabilities across various areas. So, on the back of this new contract win that you can talk about across various lots, the stock is doing pretty well, up 10%.
Okay, say surely keeping an eye out on that. Mastag is a stock that is buzzing away. But Ankita, let's talk about ICICI Lombard. This too is in focus on the back of its earnings.
Is in focus on the back of its earning. In fact, we saw an uptick of good 4% coming in on the stock. Good show, strong set of results coming in there. Let's look at the results first, and then also a couple of brokerage notes that came out. We look at that also. Well, according to the report card that ICICI Lombard has posted, we see the claims ratio come in at 68.6% versus 70% in Q3 FY24. The combined ratio stands at 102.2% versus 103.6% in Q3. The PAT grew 19% on a year-on-year basis. And for FY24, the PAT came in at 19.2 billion rupees, which is, an uptick of a good 20% on a year-on-year basis. Also, the company has improved its combined ratio guidance to 101.5% as the exit rate for FY25 versus the 102 earlier. And the management is also upbeat about the continued gains in market share in the motor segment and the retail health segment, with favorable regulatory moves in the industry trend shows are likely to be very supportive for this particular counter. Also, the management says that they are excited about to joining hands with PolicyBazaar.com. They also see, like I mentioned, the combined ratio is likely to improve in FY25, and also the loss ratio in OD segment is expected to be in the range of around 60 to 65%. Now, quick word from the brokerages. Motilal Oswal is maintaining a buy on this counter. Is actually they have put the target price at 2,100 rupees per share. Investec is maintaining a buy again with a target price of 1,950, and that's the word coming in from the brokerages. All in all, a good picture for ICICI Lombard.
Okay, that is ICICI Lombard, but let's pull up, JNK India. That's what we're going to talk about, because that's a new listing that will be coming in. The subscription is going to be opening on 23rd of April to 25th of April is when you can apply for JNK India. This is a company that is involved in designing, manufactured, process fired heaters as well as reformers, and they have a lot of key clients, 17 clients in India, 7 clients overseas as well. To talk more about the company, what are they going to be using this IPO funds for, we're joined by the management of the company. We have Deepak Bharuka, CEO at the company, as well as Praveen Sathe, the CFO at JNK India, joining in with us this afternoon. Very good afternoon, gentlemen. Thank you so much for joining in with us. And, the company makes industrial machineries. This is specifically for oil and gas segment. Could you start by explaining us which segments does the company operate in, and what kind of market share of these products do they enjoy, and what is it over there in terms of the company?
Currently, we are working in the petrochemical refineries and fertilizer segment. And as per F&S report, our last year's market share was approximately 27%.
Okay, let's move on to the next question. And, could you provide more insights in terms of what is the intended use of these proceeds for the fresh issue of rupees 300 crores in the IPO?
See, basically the object of this IPO is to help us with the working capital. So in our kind of industry, the working capital requirement is the major requirement apart from the capex. So these IPO proceeds will be utilized for the working capital requirements, as mentioned in the objects of RHP.
All right, but Deepak, coming to you, what is the demand outlook expected for the company's product as ONG upgradation, the capex, gather space, both internationally as well as domestically?
Yeah, see, as far as demand outlook is concerned, we see going forward is a huge demand for the products which we are in. As per F&S report itself, if you see, which is part of our DRHP, global demand is more than 60,000 crore for next 5 years, and maximum demand we expect will come from the petrochemical segment. As you can see, in India also, a lot of refineries and PSUs as well as private players have announced their capex plan for the petrochemical segment, and this is where we expect that going forward for next couple of years we are going to get the maximum order booking and the revenue. And on the global side, we expect the demand to come from the fertilizer sector as well as the refining, mainly in the Russia, Middle East, and these segments.
Right, Praveen, just overall in terms of the capex plan and the order book, what is the growth guidance there for FY25 and outlook overall going forward?
See, we are currently an asset-light company, and as I told you in the RHP also, we have mentioned that the objects of the issue is for working capital. So we don't have any capex plan out of this issue, and the growth in the revenue as well as the profitability is looking consistent. If you look at our past performance, we see that consistent growth will be there in the future as well.
Okay, Deepak, can you just provide the insights into the company's future plans for the expansion, like both in terms of the geographical reach as well as diversification of your product offerings?
See, companies plan on the geographies. We have already started expanding in the European market. We have done a couple of orders in African market. Recently, we also got some orders in the United States, and we are having quite a huge pipeline in bid pipeline in the Russian market. So these are the geographical territories we'll be expanding in next few years. As far as product side is concerned, we are also in the green hydrogen. We are currently executing India's first green hydrogen generation refueling station for one of the largest refinery client in India. And apart from that, we are bidding for a couple of more projects in the green hydrogen segment. Apart from green hydrogen, we are also going into the solar. We are also in the incinerators. Recently, we have quoted for some of the orders in the incinerator market, and we also executed some orders for the flares. So these are on the product side we intend to diversify in near future.
Right, and Praveen, just lastly, we want to know in terms of consolidated margins, how is that, what kind of consolidated margin profile does the company have? What is the outlook that one could expect for FY25? How are the margins expected to trending over the last couple of years and the outlook going forward?
See, on the margin front, we have been very consistent. Our EBITDA margins have been consistently at and around 18% for past 3 years. And our PAT margins have been around 11 to 12% in the past 3 years, and that has been consistently maintained.
All right, with this, Deepak and Praveen, we'll let you go on that. Thank you so much for joining us today on ET Now. We will look up to your IPO and best wishes for the same. But with this, viewers, it's time to slip into a very short break in this edition of Market Fatafat. Don't go anywhere. We'll be right back.
Welcome back. You're watching Market Fatafat on ET now. Nifty 22,127 levels is what it's holding on to in the red sharp fall over there. But let's move on and keep it going with the stocks that have been buzzing in trade today. We have Just Dial that's in focus. A decent set of numbers that came in from the company. Look at the up move in the stock because revenues on a quarter-on-quarter basis, we saw an up move of 2%. Year-on-year basis, a sharper up move that we saw, while in terms of the net profit of the company, that saw an uptick of almost 26% sequentially. 116 crores is what the net profit came in at, and improvement in terms of overall the margins of the company, 26.3% versus 22.6%. So around a 350 basis point expansion in terms of the EBITDA margin of the company. Overall operating performance has seen an improvement, and that is keeping the stock abuzz today. 13-14% uptick is what Just Dial is holding on to even as of now. But that's on the numbers. Ashish, you two have picked out Just Dial on the chart. So what is the chart looking like? How is it that one could expect Just Dial to move from here on? The up move that we are seeing today in trade, is that something that is expected to continue?
Yes, Just Dial, the stock has shown a very smart recovery on the upside, and I think the up move should continue from here. The volumes are picking up big time. And despite the volatility we are seeing in the broader market, Just Dial is still inching higher. So the overall tone for Just Dial is positive. We can expect the trend towards the level of 1120 on the upside, and the support for the stock is day's low, which is around 950 levels.
All right, so that's the take coming in on that particular counter. Let's talk about Angel One then, and that particular stock is in focus on back of its earnings. Vinny, yesterday, no doubt, it was a public holiday, but companies, that didn't stop the companies from reporting their earnings. So you had Angel One that reported its earnings yesterday, and at one point in time, the stock saw an uptick of as much as 8.7%. Now it's erased all of its morning gains. The company's profit saw an uptick of about 27% on a year-on-year basis. This after it posted its Q3, in Q3, its lowest quarterly profit growth since September 2020 listing. Also, if you see the revenue from operations, it jumped about 65%. The orders surged about 79% in the quarter gone by. But yes, given up all of its gains actually right now, that is Angel One, no doubt 8.7% on an intraday basis.
Yeah, it was a decent number though. I think with the market, I think maybe that subduedness is something. The client addition, everything seemed fine. But okay, let's keep an eye out on Angel One or overall how the market recovers. But Sterling Tools, that's managing to hold on to gains. At least the last time I checked, that's something that we should watch out for. But Snehi, what's the reason that we saw a buzz coming in the stock today?
Well, Vinny, absolutely. And like you said, the stock is holding on to gains pretty well, and shares are up as high as 11%. And this surge in the stock is after the company, through its subsidiary, has signed an MOU with South Korea-based Yongin for electric vehicle components facility. Now, Yongin is a major supplier of components to the Hyundai Kia Motor Group. Yongin manufactures electric components like transformers, AC/DC reactors, coil and choke, among others. Sterling Tools is eyeing a revenue of 250 crore rupees for the by financial year 2030 from this deal. This is what the company has said in a statement that it filed on the exchanges. Apart from that, the MOU will also boost Sterling Tools' capability to provide solutions for EV and hybrid space, as well as other automotive applications, incorporating the latest technology that it receives from Yongin. So on the back of this collaboration, this MOU that they've gone ahead and signed with this South Korea company, stock is doing pretty well, up 11% right now.
All right, so that's Sterling Tools. Luckily, that one is still holding on to gains, but there is one sector that is making a comeback, and how? Because everyone's talking about it day in and day out, isn't it, Vinny? And there has to be telecom
dialing
sector.
there. Okay. Everyone's dialing onto the telecom sector now, finally.
Absolutely. So, Ankita, tell us, why have you taken this particular sector today? And I believe we have a good IFL note as well.
Cheryl, a couple of things. Vodafone Idea, of course, the FPO opened, and also a strong IFL note coming in, which is giving an upgrade to all these three counters. And look at the moves coming in there. Vodafone Idea up 3%, Indus Towers is up 4.8%, Bharti Airtel trading with gains of 5%. Let's dive into the notes then. Now, there's an upgrade in Vodafone Idea to add from reduce, and they've hiked the target price to 14 rupees from 11 rupees. Indus Tower, they have upgraded the stock to buy from reduce, hiked the target price to 379 rupees, and for Bharti Airtel, they're maintaining swing buy and hike the target price to 1,379 rupees. Now, the upgrade in Vodafone Idea has been recommended, and they are also recommending to subscribe for the FPO. Also, now, quick note on the FPO: the telecom major has mopped up close to 5,400 crore rupees from anchor investor ahead of the FPO, and the FPO, of course, has opened today, likely to go on till the 22nd of April. GQG Partners, through its through its various funds, has got the highest allocation of nearly 25%. And of course, like I said, the FPO opens today, and the price band is going to be from 10 rupees to 11 rupees a piece. So that's the details of the Vodafone Idea, FPO. But they're also expecting, Indus to reinstate dividend, and also they see 2 rounds of tariff increase in the next 3 years, and there is a decent chance of a reduction in the AGR liability, which is a big positive for both Bharti Airtel and Vodafone Idea, aiding all these 3 counters. And we can see the sharp up move coming in there in the telecom space. Vodafone Idea, Indus Towers and Bharti Airtel in focus today.
Okay, let's keep it with the telecom space then. And Ashish, are you getting network now for Bharti Airtel? That's the word. Should we expect a buzz now?
Bharti Airtel was consolidating in a broad range, and 1240 is the resistance level. It has decisively broken about that 1240 mark, and suggesting that the overall trend is now positive. We can expect Bharti Airtel to reach towards the level of around 1340 on the upside for the targets, and on the downside, the support for the stock is going to be around 1200 levels.
All right, so that is Bharti Airtel for you, seeing very good gains in today's trading session. Then let's move on, Vinny, and actually let's talk about these power-related names. In fact, clean energy names, right? All of them are a buzz today.
Absolutely, all these clean energy names are a buzz in trade today, and what we're keeping an eye out on is Hitachi Schneider. Goldman Sachs has initiated coverage on these stocks as well as Power Grid, that is there as well. But Hitachi, they have initiated with a buy rating, target price of 8,250 rupees, while Schneider Electric is a sell rating. So that's why we're seeing a fall coming in for Schneider Electric. It's down in trade almost 3-4%. Sell rating, target price of 470 rupees. So considerable downside that one could expect. They are expecting to see for Schneider Electric. Now, main reason Goldman Sachs is saying that they believe that overall the transition is something that will be driving the multi-decade rise in transmission capex. They estimate India's power transmission capex requirement at around $500 billion by FY50. But overall, they're saying that they see Schneider as a potential beneficiary in terms of expected rise in the capex. But for Schneider, the risk reward is not quite favorable post the rally that we've already seen there. So yes, in the last 12 months, the rally is coming, and that's the main reason that Schneider Electric is a sell rating. But overall, in the power transmission space, they're quite positive. Hitachi Energy, Power Grid, Schneider Electric, all of them managing to hold on to gains.
All right, so watch out for all of them. But Snehi, no doubt Power Grid is mentioned in the Goldman Sachs report, but there are other news flows as well supporting the move today.
So other than Goldman mentioning this stock and initiating coverage, we also have a stock-specific news coming in. The company has successfully bagged a bid in the tariff-based competitive bidding system for establishing interstate transmission systems. This is coming for 3 projects, and these projects will be executed on a build, own, operate and transfer, which is a BOOT basis. The bid is for transmission projects in Madhya Pradesh, Rajasthan and Gujarat, and the company will handle evacuating power from specific areas in these regions. Additionally, the company has also received letters of intent for similar projects in similar regions as well, and the committee of directors for bonds in their meeting held yesterday has also approved the raising of bonds in 1 or more tranches or series up to 12,000 crore rupees. So on the back of this, these 3 order wins and also their fundraising plans up to 12,000 crore rupees, stock is doing pretty well, up 2% as we speak.
All right, so that is Power Grid for you. That is in focus on back of a slew of order wins. But on that note, we slip into a break on this edition of Market Fatafat. When we come back, more stocks to discuss. Don't go anywhere.
If you like this video, then like, share and subscribe to ET Now.